Good morning, everybody. You ready to roll? Get prepared here. Nothing too crazy going on in the economic calendar. So we had the Michigan numbers coming out. That's existing home sales. Got it. Be coming out about 40 minutes from now. Hit that like button on the stream. What up, what up, what up? NQ, upper DD band overnight. It's correct. Landed cautious today. Hopefully have a nice long and strong week. End. All right. Oh my goodness. What's on here? Oh, there's at the door. Amazon there really quick. All right, you guys, how y'all doing today? Pre-market analysis here. Love you guys. How's it going? All right. Joining about 5 minutes here. Sorry, I'm snacking my breakfast real quick. My trainer has me on a new diet. Hired a personal trainer. Try to get super healthy right now. Gotta take health seriously. Let's talk about some of the things we're gonna be dealing with and seeing today. Just do a little quadrant here. We have the VIX slightly above triple B interacting with it. So any upside movement, VIX is going to hit triple B and likely bounce. So this might be a down day today, interacting with it so quickly. We know that anytime VIX bounces off of something and goes, the market can tend to experience a little bit extra volatility. NASDAQ also was at the upper band, which means today is a half-pace trading day. We've already completed most of the move. S&P got close enough as well. So the yellow light is on. I'll be trading half a normal position. Doing the risk interval DD bands update now, or do we need to wait until market opens to manually enter those DD lines? They update between 4 and 5 o'clock Central. So previous night, they've already updated for today's session. So Jamie, you are good. It does open at noon in Iceland. Is it still cold where everybody's at right now? Oh, excuse me. It got warmer. It's not warm, but it's not certainly not as warm. I mean, not as cold. Oh, Jace, I answered your question yesterday. It's a program called Epic Pen. I bought the lifetime license for it. Shout out to Iceland. You guys are going through it, I bet. Epic Pen. It's a good tool. It's a good little tool. So I'm doing a little breakfast thing called overnight oats. And what it is, you take oatmeal, mix a little bit of cinnamon in it. I put a scoop of protein powder in it, stir it up, and then soak it in like almond milk or something overnight. Put a lid on it. Wake up in the morning, your oatmeal's like soaked up the milk without having to microwave it or heat it up. So it's like ice cold, like al dente oatmeal, and it's not bad. Apparently you don't heat it up, so you don't just, you know, you're just eating like raw oats. I love it. Like I think it's a little protein, a little. Oh, happened to my trade yesterday. I made $2,800 yesterday. I posted a picture of it in the Discord. So here, I think on this particular sense, like I bought like a small position, and then when it dipped, I added to it. And then when it really dipped, I doubled down, like I said, and closed all the way up at DD. I closed. It's about $2,800, something like that. And then, so yesterday's trade plan was pretty simple. It was the 1A, 1B trade of a bull long up. Really simple setup. Right here where I'm circling on my mouse, I bought, and then I bought again. Exactly like I said, this was a textbook play. Remember, I bought again, let it fall, doubled down, brought it all the way there, and closed when I said I was going to close. No more breakfast burritos? I mean, I am doing breakfast burritos still, but I'm also like making a little variety here. Breakfast burrito is great. I'm trying the oatmeal thing for a little bit. I'm kind of digging it. You guys love hearing my stories about my microwave breakfast burritos. I meal prep 40 of them at a time. Once every month or so, there's burrito day, where I just Pick up a shit ton of eggs, shit ton of sausage. Pick me up home fries. Okay, let's get ready to go here. Turn my trading on. Instant placement. Rejection only. Blah. Give you open up. Gap up. And resilience is positive, nice and strong. Give it like 3 or 4 minutes to settle out. What do you think? Remember, the R&R is going to be 2 DD band. We've already touched the D band on NASDAQ, so it's already a light day to begin with. Resilience is pretty solid and decent there. I gotta wait for this one just to see what we get. Monthly hedge pressure is going to be on the table today. I also put in an order for them to make a hedge pressure resilience for weekly hedge pressure, the blue one. So we'll see if we have that this week. About time we make that. All right. Just in general, keep an eye out today. VIX is limited to upside, so any downward movement, VIX is squashed. The market's going to dip and hold. We are above triple B, so we'll have overshooting pivots. So any rallying on the market, VIX will bounce off of triple B as well. So we are contained today. This is going to be a really strange day. There's going to be playing in there at least. This is bull long down, which is also very bullish. We are at monthly hedge pressure. If we hit 477, I'm gonna analyze monthly hedge pressure resilience just to see if that ends up giving us a bounce. So we will see when that number finally comes through and calculates. We're still calculating all the rest of the pool, so we'll see. Yeah, we'll see if we can get ourselves a little. So we have a pretty solid monthly resilience here. Oops. So it looks like we will get that bounce. The question is the 1B trade. So open, down here. So open, yellow open is that 1B trade right here. And then any break against open goes here to DD. Just like a bull long up, be a little more cautious. This is going to be monthly res and res greater than 0. I want both of them to agree. This is hitting at a yellow line right here on that support. The question is, do I want to take a little stab at it? Well, the data looks pretty decent. Let's put a 5 spot on it. For 5 or 6 point trade. I love my overnight oats. They are kind of tasty. We watch out for the Michigan numbers coming out a little bit. And I think new home sales today. Existing home sales. 26 minutes, we will have a little tiny bit of a catalyst. Found myself a new lo-fi channel today. We'll check out this one. The keto life for 2 years. Yeah, dude, like I'm into like trying new stuff. I get healthy. All right, check. These look good. So monthly hedge pressure to support. Losing monthly hedge pressure on monthly expiration day is going to can cause a lot of turmoil in the market. I, for one, am in the boat that I do think we are going to keep rallying and continue to trade higher, especially into this month end. The month ends today, the trading month. We are pressing all-time highs. And I do like what I see. Check. Things all look good. No irrationals. All things are great. I'm gonna take one more stab when it touches a little bit of dip here. Remember, we'll know pretty quick if this is gonna bug out. That's it. Everybody see this? Check. These are good. Watch the resilience number here, 375. Still looking okay. What's up, friends? Smash the like button on stream. We love you guys so much. Y'all are the best. Yeah, yesterday I made $2,800 on the trade. It was a straight up belong up. It was a textbook play because could have gotten any easier. Correct. Upper DD band was hit on NASDAQ. We see that in the alert. All right, you guys. Let's check out what's going on with the data today. 24 minutes. Existing home sales coming out. Let's go ahead and pop that guy open. Michigan consumer sentiment coming out. Care about that one. The consumer expectations. Put that one there. Inflation expectations. Talk about those in a little bit. These are going to be numbers that are going to help us decide what the Fed's going to do. Consumer sentiment had a huge pop at the last read. Remember that one? Consumer expectations, they all were just, we thought that was a weird read there. Inflation still, other than the data points looking like that, it's still matching what the CPI is. Inflation's still coming down. The labor situation's improving a little bit. So I think at the end of the day, it might be a nothing burger catalyst day. I know IWM real quick. IWM is hitting. IWM's in a BSD, hitting pretty hard to the downside. Yeah, IWM's not looking super hot. Oh, we hit our little bounce here. He's looking really solid today. Let me get this. Right at this yellow line. Why not? Let's take a little bounce trade there. Double the position size. I know I'm trading up the upper window of the DD trade because, like, essentially, you know, NASDAQ and S&P are limited right up here. But I do believe that we will likely trade higher and trade with the strong green candle. My spidey senses are tingling and telling me that right now. Ladies and gentlemen, click that like button below stream. Give us some love. Remember, we'll have overshooting pivot situation. If it does hit DD band after getting a near miss like that, it'd be nice if it did that. That'd be the wish list. Keep an eye on both the resiliences are great, and you have both of them on the supports here. Support. Right. Is everybody confused or questioning about what I'm doing right here? The white resilience number is the tiebreaker at this white dash line. The yellow resilience number is the tiebreaker at this yellow line. Them both being positive implies they are too likely to both support. So this is good. I added to my position here to support to trade to next resistance. Next resistance would obviously be DD band or to close the box out. Between the two, the white resilience takes precedent over the yellow. So if you have them on top of each other and the white is negative and the yellow is positive, the white is more likely to win. It's a stronger pull. Can you talk about overshooting pivots? Yeah, so in a state of the VIX, imagine this, right? I'm going to demonstrate on DD. When the pivots are not overshooting, typically you're going to hit a pivot and you're going to turn quick. And they'll say like VIX is less than triple V. So essentially you're in the range of not overshooting pivots. What you talk about today, that's not really the case that we're in. You can see overshooting pivots when VIX is above this triple B level, which means volatility is hedging itself higher a little bit. So when you see that happening, what typically happens is the market tends to hug and hold your pivots for a while before it makes up its mind. Or it can overshoot pretty quickly and then work its way higher. You see the difference between the two? So it can either hold at it for a while or overshoot. Here it's quick. It's going to either bounce and go or not. It's not going to hover. So in the environment of right now, if we were trading below triple B, I'd expect it to hit this and bounce pretty quick. It's going to hover for a couple of minutes at most. When you're in this above triple B environment, it can fight here and play here and overshoot. So I know that, so I need some flexibility in my position. I don't get scared out very easily. I give myself one full strike distance to know that that's losing the battle, right? So just because the volatility makes the market thinner at these pivots, there's not a lot of the buyers and sellers aren't necessarily like bunched up here. They're spread out, which is what volatility actually means in layman's terms. So if they're spread out like that, then what you'll normally see is that the market can hover around your pivot. So right now it can hover and not really bounce quick. See how it's hovering and hanging and hanging? It can even drop before it rips, dip before rip. You guys follow? So the condition of the VIX is what helps you understand how the trading day is going to behave. So we are in this environment here. It's above this February 14.4 level. And if you go into our training modules, which I'll show you guys very quick. In the summary section, it explains what all these different rules are. There's 15 different ones here. Each one of them has a condition on the market. These are called initial checks, unusual, or usual market. So we call it the bull bear breakpoint on the VIX. It's more of a volatility thing. We just give it a cute name. If it's above triple B, there's loose pivots and overshoots. If it's less than triple B, razor sharp pivots. A BBB tap can also pivot the S&P rapidly. Take note of that. So just like any other VIX pivot, to tap this can pivot a bull S&P very quickly. We're trading above it. It's overshooting pivot. We described the condition to you. The triple B is something we teach you how to calculate, boss. You can calculate it on the Tuesday before the third the Tuesday before the third Wednesday of every month. And if you go into the Discord, there is a channel called Triple B. So in the reference guide, if you go here, each one of these indicators has its own channel that gives you a little bit extra info. And I actually happen to come in here and post the latest one for you. This is the old one. You can see how that works. Yes, sir. Well, that's all part of the subscription. You guys get all kind of good little goodies every once in a while. So right now it's likely to fight and overshoot. Things are looking solid here. Let's check QQQ really quick. QQQs are looking strong today. Here's an example of the monthly hedge for sure bounce, right? It may not bounce exactly. It's trying to bounce there. Hold on, where's the drawing? Again, the overshooting pivot. Sometimes this is not a clean bounce. It just plays around, but you have the Nasdaq resilience is positive on both fronts. So you get both modes here. You have support there on monthly res. You have support here on regular res. Now S&P is starting to lose a little steam here. This is a little scary for my trade. I'm gonna be careful on this. No bueno. So if you look at the market right now, Russell's dipping pretty hard. The S&P is dipping like medium hard, and Nasdaq is like doing this. So it's not looking super hot. Tech is strengthening into the morning. The S&P is falling back a little bit, and the Russell's getting demolished. So we might lose this on support. So be very careful here. Like I said, I'm only in a small position. Nothing too crazy. So again, what I'm looking for is we'll give it a leeway of about 1 strike distance. Let those pivots overshoot. At least here to fill the gap. That's what I want to see. Needs res greater than 0, which we're not getting. So you're very careful on this guy. Let's double check the monthly maps. Let's predict the future today, ladies and gentlemen. Let's see how the monthly maps are reading up. Boy, I love monthly maps. All right. Straight bullish. Very good here as well. Teach you how to read these. Our techniques are very solid on coaching, or because we give you little cartoons to teach you how to do it. Don't let the oversimplification of this make you think it's not a sophisticated piece of machinery. You just make little fun cartoons to make it easy. Sloping down, bulls longing more. Bottom of the bull zone, sloping down. The dark gray, sloping down. Extra longing. The bottom of the gray side, the top of the gray side, also sloping down. Bears exiting position, short squeeze. You have combination, bulls longing more, bears exiting position, short squeeze, long squeeze. Or sorry, long accumulation, short squeeze. So over the course of the next week, the market's still looking to go higher and find buyers here. That's great. Number two, in between the two, it's pinching or not really much of a space or getting wider. So therefore, volatility is decreasing. Volatility should be crunching. At the same time, VIX should be going down. Monthly maps predicts that behavior as well. See, our monthly maps predict the future based on positions. I can't predict what exactly is going to happen in the future, but they tell you the state and condition of the future is going to be lower volatility. And as you see, over the last 2 or 3 days, there has been lower volatility. Thank you, monthly maps, for telling me that. So monthly maps is a predictor to tell me what to expect weeks in advance. Now we get some volatility, around Fed day of the February Fed day and stuff. Let's see, some earnings, I guess, season stuff. But here, nice and clean, non-volatile bull market. Huzzah. Tap that like button, you guys. We're spitting fire like a dragon. We're spitting fire like a dragon with the SoundCloud account. Like a dragon with a mixtape. I could also write music if I wanted to. It'd be terrible music, but it's music. Oh yeah. All right, take a look at SPY. That's QQQ. See if SPY is any better. SPY is just clean and clean. Look at this. Look at this, guys. Super clean. I can't argue with what I see. It's telling me some pretty lovely things. Whispering them in my ear, these little sweet nothings. That market is bullish. Don't be afraid. Your long's probably okay. Market's looking for higher highs. We go. We love this. Love it. So I'm not scared of the market. Even if we get like a soft day today, I'm not super scared of it. Resilience is starting to heal itself, which is decent. How you guys doing today? I love y'all. I love y'all tune in with us every morning. Y'all give us a lot. I'm about to turn on my camera this Monday, give or take. finishing up the look and layout of the stream. Resilience rescuing itself, looking solid and sexy as ever. Many good people, you know, talking about a higher high for SPY for 800, just nimble over top. We go down big. I don't see any evidence for going down big. As a matter of fact, I'm going to make a prediction, and I know it goes against your position, so don't, who cares what I say? I'm just some rando scrub from the internet. So listen, I think we're here. I think we're heading for 500 by March. We're going to go straight there with no downside, limited downside. It needs a catalyst to pull back. There's no evidence positionally that the market wants to sell off. The market's going to continue to hedge higher without an event. We need an event. So what's the event going to be? The Fed's got to raise interest rates or something we can't see. But ladies and gentlemen, as Matt and all of you here, Jace, y'all remember, right? Back in before the Fitch slap we had back in August, we were the ones in August saying the S&P was going to 500 by quarter one. Or yeah, things like that. You remember, guys? Some of our guys are buying like quarter two leaps to go to 500 on SPY, and we had the market rally to highs, and you had the Fitch slap, a couple months of down, and now we're back up to here. Without that Fitch slap, we were spelling out 500 S&P. I was on a podcast with the Trading Cam guys on Beat the Bell, and I was talking to Beat the Bell, and they go, Matt, boy, you're a little aggressive. 500 SPY by quarter one next year. I was like, well, all the evidence is there. Looking great. And then the Fitch slap happened. Everybody's like, oh, it's a bear market. Market's going to fall, everyone. Oh, all the pools were wrong. Ooh. And then now we're back to highs. The bears came out for a minute, got a sunburn, and went back to their caves. You love those guys? You started with them? Oh, training camp? Oh, yeah, dude. I love the cane cap dudes. Here's some cool peeps. Super cool peeps. I need to get back on Beat the Bell. I was a Wednesday correspondent with them. Oh, I should give Noah a call and see if I can hop back onto that. We were taking a break from all of our social media to build the marketplace so that we can emerge with the marketplace as a focus. Kind of pausing recruitment right now of new faces. While we clean up what we have, the last little details of the platform, and get ready for the marketplace. Sunday will be our first beta launch of the marketplace with our first vendor. We're like a month late on that because we've been building some new things to go with it. Took their boot camp and helped a lot. Yeah, those guys are super sharp. I really like them a lot. Okay, here we go. There's that first bump here. Resiliences are great. Things are looking solid. Can't argue with that. Keep an eyeball here on resilience, looking good. Our trade stacking up pretty high. I like that. Yep, I'll check Amazon. Give me 1 second. Just worried for a bit. Yeah, me had these irrational flags. The resilience just was delaying itself for a teeny tiny bit, but I think we're good. Up about 200 bucks already on the trade. Check Amazon monthly chart. Let's take a look at it. Remember, we are somewhat limited because we might have some VIX interactions here. Okay, take a look. So right now, Amazon going into next week, you can see that the bull zone is, like, Amazon has a weird setup for today, right? So this is what's going on today. Super bullish and no bear zone. So how are we going to read this? Well, over time, it's still bull zone slipping down, bear zone slipping down. So it's still very bullish over time. More volatile as the weeks go by because it's getting wider. And this one today is really hard to read because you obviously don't have a bear zone comparison. But between here and here, it is sloping up. So there could be some bull liquidation just on Amazon alone. But it's really hard to say without the complete picture. So the question is Amazon, it's inconclusive here. Hard to say. Not implying any selling or anything, but you know, if there was a bear zone down here, shorts, you know, both of them sloping up means that you can have a little bit of selling pressure going into the next week. But I think that reading today being monthly expiration, I wouldn't put too much effort into reading this today because what we call it the iron wall. Typically, when you approach monthly expiration, the actual final day of monthly expiration, firms typically trade from month to month. Like, essentially, everybody's focusing on the end of the month, which is today. And as soon as the end of the month happens, everybody focuses on the next end of the month, a month out. So when you get to this end of the month, people are shifting their positions around. And then on Monday, you will get a good reveal of what next month is going to be like. So typically, the last 1 to 2 days on monthly maps on individual stocks tend to get a little muddled anyways. And they'll put a lot of stock into reading them, if that makes any sense, Mehul. They get very clear at the start of the month going forward. So what we usually do is on like the Thursday and Friday of the end of the month, which is yesterday and today, we tend to ignore the first read as being super meaningful because everybody's monthly options are going to expire today and they're going to shift rapidly to the next month. So whatever weeklies are being used to hedge current positioning and movement are going to shift very drastically and move towards the next month. So trading basically operates in like month blocks because firms are going to be holding a stock for a quarter at a time to get the dividends. So every, like at the end of this month, they go, oh, wait. Okay, then Monday happens, they're repositioning for that month. And then trading happens, they might adjust a little bit. As they get closer to expiration, they're going to close out their positions and jump the next month. Get close to expiration, they close out positions and jump the next month. They're trying to stay in the trade for long periods of time, i.e. your 401k, things like that, mutual funds. They're not going out there and dumping the position, getting in the position. They're holding, you know, billions of dollars of stock in each company, right? So as you approach the end of the month, you tend to think that that last data point for the Friday is a 0 day on weeklies, right? This is just today's options. Looking a little weird. That's pretty normal for it to be inconclusive. Does that make sense? Rule of thumb, the Thursday or Friday of monthly expiration week, ignore the first bar. It may not have good data because everyone's already closed out those positions and there's not much left. And then start your reading from here. And then on Monday, start your reading from there. How are I to read Celsius? Hold on. Let's go. Ooh. So our algorithm is not identifying strong bull zones. Again, it's the same thing. We call it the iron wall. The iron wall being that where we are right now, until you pass monthly, you don't have any clarity on the other side of the wall. So monthly is where you... Now, Amazon had a little bit of evidence, but remember, you always go the following Monday after monthly expiration. The maps can change drastically that Monday, and then they stay relatively similar for the month. Doesn't mean they will change, but they can change. So this is the iron wall of expiration. When you come here on Monday, this will likely be different. Yep. So treat it like that. You follow? So again, this is victim of the iron wall. It's very strange and inconclusive because people are rolling out of those positions and closing them out. So as soon as Monday happens, you're likely to see your bull zones pop back in. And that's just something that Ash and I noticed over the years. Is that, and the reasoning for that is that this is This is the biggest day in the shift of the dynamics of the market. People are in and out. Oh, there's that first trade. I'm getting $400, $500. Something's, oh, we have the read. We have the read. Hold up. Hold up. Let me flatten really quick and read the news. Hold up. I'm going to take the $400 and pocket it really, really quickly. We have our data points come out. Everybody, we had new housing, existing home sales. Let's read really quick. All right, coming in. Existing home sales was a miss. I know I closed out really early, but I just want to read this. Anytime we get a quick pop to the upside, I'm going to close out and maybe double into the trade with the smaller position a little bit later. He's looking solid and sexy there. We're right at the yellow line. Actually, the yellow line is 48.29. In here. All right. Existing home sales. Huge miss. Existing home sales. Big miss. Let's read these. And the Michigan consumer sentiment numbers came out. Okay, 3, 4. Anytime we get a big pop like that into a resistance, I'm going to head and just close my position. Okay, existing home sales for month over month December, and the total in December is down. So this is a -1. The month over month means the change is lower. So if the change is less than 0, then it's, if the change is positive, it means there's more homes sold than the previous month. The change is negative, it means there are fewer. The change is also flat, which just means it's a steady decline in home sales, and it has been that way since, you know, since COVID. For the most part, existing home sales have been in decline. The jobless care about that today. I just had this. Hold on. The total for December, 3.78 million. Go back on this one. Nice little $260 to pay for your cavities. Killing it, bro. Have a good day. Good luck with the dentist. Again, still trending down. The total sales still trending down, like I said, since COVID. Existing home sales have been down and down and down. You can see that with the month over month. 1 year and 5 year expectations. Remember, the Fed targets a 2-year inflation expectation with their. So we have the 1 and the 5 will help us interpolate between the two numbers. See what we think the Fed's going to do. 5-year inflation expectations is expected to stay low. Now, remember, the Fed wants to target a 2% inflation target per year, right? So we got the pop, the yellow. I went ahead and closed out. I'm going to sit out on this one for a little bit. I don't know, maybe take my $400 and call it a day. Right now, I don't see a lot of activity. There's a lot of things that could make this market spontaneously have a sell day. But let's just put back the VIX here. You can watch these VIX pivots here. Decent day. So, all right. VIX is about to hit triple B probably today as well. So these inflation expectations have stopped raising, which is great. Over 5 years, people think that inflation is not going any higher. It's perfect. The 1-year inflation expectation, despite a couple of pops, is still trending lower. And today's read on that, 2.9 on a 3.1 estimate. So it's a beat, right? So people are, inflation is coming down as expected. It's the job market. Things are healing itself up. Things are getting back to normal. Since post-COVID world, inflation causes, you know, high wages, high cost of production, things like that. Healing itself in the soft landing the Fed was talking about. We got, clearly, the Fed's likely to not raise interest rates. But if the market goes to all-time highs and higher, the Fed's more likely to do that. And the whole bad news is good news mentality was one of the first people in Wall Street talking about this in the podcast circles. And then my talking point became everyone's talking point. I am going to take credit for it. Bad news is good news. I started saying that. We had 3 years ago, before COVID even happened, when they were shutting down all the businesses, I literally had one of my streams talking about this. I said, this is a terrible idea. You can't do this. And everybody was like, why can't you do this? It's safe. And I go, well, it's not the reason I say you can't do this, safe or unsafe. Shut down all the businesses, you're going to cause 5-10 years of problems with inflation. And nobody really understood at the time what I meant. And I explained it back then. Said, you can't shut down. I remember this working at a chemical plant when I was an engineer. Okay. Imagine that you have a thing that goes into a machine, right? And the machine makes some products, splits it this way. Those products go to another machine that split it this way. And then those products go into a series of machines that go this way and that way and all over the place. And it's like, okay, everybody relies on everybody else, right? Okay. So, and then some of them loop back around and like, this is my machine I run, my unit. This is somebody else's unit, and this is someone else's unit. And all of a sudden I come through and say, nope, guys, inflation. We're shutting everything down. Everyone turn off. Oh, that sucks. Okay, turn off. And all these tanks drain and everything. Then all of a sudden I come back and say, JK, LOL, we're back on. It's not just like, oh, flow comes back through here and everything turns on nice and clean, because everything is relying on something else to start or play up. My problem creates problems for all of them. Their problems create problems for him. He requires this person to start up. They require him to start up. And then they can't start up because they both rely on each other. And then all of a sudden, to turn everything down and turn everything back on is a whole process. Like during a turnaround where you shut down an entire plant, take it apart, clean it out and put it back together. It's not like you just push a button and everything turns back on. There's a whole week-long procedure just to turn a plant back up. And it's a very methodical process. Anybody's ever worked in a chemical plant, worked in turnarounds will tell you the same thing. They just don't go, all right, everybody, we put the machines back together, stand back, we're pushing the power button, we're back on. We're back to making shit. Whee! Doesn't happen that way, right? Who here has worked in a chemical plant or refinery? You turn it back on, you start things up one at a time. Okay, let's get this pump circulating. Okay, the pump is circulating because it's in feed to it. Okay, let's open this valve. Okay, let's vent that. Okay, now we're checked. Now you can go because we're running. So send something to us. This guy opens back up and sends to him. Oh, sends too much, trips everything. They got to start the whole process over. You have to step through each piece one at a time to turn the main thing back on. It is a messy thing to start a complex piece of machinery once you shut it all down at once. And we said this. And I go, what's going to happen is that everybody relies on everybody else, right? You have a restaurant, right? It serves, I don't know, some kind of, this is a truck. It serves fish, I guess. Fish is good. We need fish. Okay, and the fish, there's a boat that goes out there and, you know, brings the fish to you. Well, the boat kind of, you know, can't come because it needs parts to repair what is broken. Now the parts have to go to another, you know, facility from another boat that's shipping those parts. This boat ships mechanical parts for boats, so it's got to ship to this repair facility to repair the boat to bring the fish. And this guy can't come because it's out of number 6 fuel oil, right? And there's another boat that's got fuel oil in it, which is the fuel for this boat, and he can't come because he also needs repair parts, right? And all of a sudden, like, well, the repair boat needs to fix the fish boat, and the repair boat can't come because the gas boat isn't there. Gas boat isn't there because this also needs repair parts. And these two guys are like, help me out. Well, I need fuel or I need parts. What are we going to do? And so you get this like just congested clusterfuck, lack of better explanation of things that can't just turn back on. The guy's like, hey, I see these guys over here catching fish. There's this line in the water. He's got a boat full of fish. Why can't you get it to me? Well, like, he's just a fisherman in a boat. There's all of these little bottlenecks that need to reset and come back, right? And so when you shut everything down abruptly like that, you're going to make it where the first boat that gets to here can say, I'm the only boat, motherfucker. You must pay me whatever I want for this gas you want. All right. right, I got to get going. All right, I'll pay you whatever you want. But if I'm going to pay you whatever you want, then you're going to pay me whatever I want to cover the cost of his price gouging. And the next person's like, we got to cover the cost of my price gouging. And I'm going to build it into the fish. And the guy selling the fish is like, why was my, $50 a pound order now $80 a pound? Well, each person had that, well, I'm the only guy, you got to pay me a little bit more mentality. When you shut everything down and start it all back up and you're a desperate situation, they will charge you more, always. And we experienced that in the chemical plant as well. I used to remember when I used to make acrylic acid, Dow, I ran their reactor units. I was a run plant engineer for a chemical plant. We made diaper absorbent for Huggies. For real, the little white powder. Part of our raw materials, we brought in this thing called ethylene. And we had a blend that we bought from three different refineries nearby. Their off-gas product was ethylene. They sold it to us. We turned it into something. Now, we had a couple of backups sitting here, just in case, from 3 other refineries. So if like Exxon was shut down for the day, and that was a third of our feed, and 2 and 3 couldn't cover it, and we needed some more, we had to go buy the ethylene from these 2 guys, and they would charge us on the open market whatever it was worth. And sometimes if we needed a lot for them, they would raise the price on the spot and charge us a whole lot more because they knew we were desperate. It's kind of what happens. When you need something, people realize that and go, oh, you need this, huh? And I got it. Demand exceeds supply and prices always go up. So we experienced that hyperinflation because the logistical cost of things went way up. Cost of production went up. And also when the workers go away and come back immediately, you might have the boat driver himself. The company's like, ready to go. We got the fuel. Let's send the parts over. Well, we don't have a driver and everybody's at home scared because of the super flu. And the one guy that comes back to work, guy or girl comes back and says, look, I don't care about this. I need a job and I need to get paid. You need me. And I'm the only person available. You're going to pay me double because I'm risking my life for you. And then not only is the cost of raw material, or sorry, the cost of transportation going up, now the wages are going up. Same thing. So at the end of the day, everything went up, right? The logistical chain being broken so abruptly causes this dynamic that just does not turn on overnight. Because I know that when you have a complex differential system, I say differential, like a recursive type system where this thing relies on this thing that relies on itself in a circle, that causes this like standing wave that you can't get through. And all of a sudden things have a hard time debottlenecking. This is something we took classes on this in school in engineering. Plant design. There's a whole mathematical dependency of things on each other. And you can have very big slowdowns. And so because of that, inflation was going to be high and it's going to take years for things to just reset. But if you leave it on its own, as more people go back to work and more ships get repaired and things slowly start to rebuild, inflation will go down on its own from that mechanic, despite what the Fed is doing. The Fed is doing is having zero effect on the inflation whatsoever. It's having all the effect on people's psychology towards the stock market, though. The Fed knows that, and Fed raised rates to control inflation on the surface, but they really raised rates to stimulate some layoffs and again shake that foundation. Because when people get laid off, they come in wanting a lower salary, and that curbs inflation by like a secondary protocol. So with the market being at all-time highs, the Fed turns on the afterburners, announces quantitative tightening. Stock market sells off for a year. People get laid off for a year. And all of a sudden, they're a little bit more desperate for wages, but they don't get laid off all at once like in COVID. They just get laid off little by little. They come back wanting higher salaries, and the company's a little stronger, and they're like, nope, we have more employees to choose from. We'll pay you less. And so the inflated salary started coming down, and inflation started coming down because you've forced a few layoffs. Now, Jay Powell doesn't go on TV and say that. Hey guys, stock market's at all-time highs, so we're gonna scare Wall Street a little bit and slap you guys in the face because we just, COVID happened, but yet the market's at all-time highs. Doesn't make any sense, but we want to stimulate a sell-off, 5 or 10%, get some people laid off. Wages will come down and inflation will come down as a result. Because it sounds kind of morbid, and people will be like, hey, my job, but for the greater good, right? And you gotta force a few layoffs, and that's what they did. So at the end of the day, inflation's just naturally coming down. And it's going to continue to naturally come down as the economy heals itself. There's really no mechanic that the Fed can do to control inflation. Now, the problem is the bad news is good news thing. So if the stock market can go to all-time highs again, inflation can come, it can transition from that cost push inflation, which is what I was describing, to a secondary form of inflation that just comes from hypereconomic activity of a strong bull market. If everybody's doing well, people expand, the cost of production goes up because they're expanding their business, therefore prices can go up. They can make a little more to buy a little more, and natural inflation takes over with a healthy economy. So while the costs of the front end went down, we're transitioning into a possible period of economic expansion, which can cause inflation, which can invite the Fed to come in and start raising rates again at some point this year. Middle of the year, end of the year, Fed's likely to raise rates. So the stock market hit a high, sold off for a year. Back up to right here. Fed is raising rates 0. What I said is that once the market goes to all-time highs, Fed's going to start raising rates really aggressively. 1, 2, 4, I think we'll get to about a 10% rate at some point. They're going to raise rates into the rally. Alan Greenspan did this in 1996 during the Clinton era. I think that's something that's very possible going forward. That the market continues to rally and the Fed's going to raise rates into it to really just nuke inflation of this side. Because if the stock market rallies and goes out of control, inflation will come back, hyperinflation. But because they're going to prevent that, they need to destimulate the credit market and start raising rates really rapidly. So while the Fed is in this period of markets here, not raising rates at all, and people are saying potentially cutting rates, I don't think they're going to cut rates. They would only cut rates if the stock market was if the stock market was here, they would cut rates to keep the stock market from crashing because people are going to literally behave that way. If the stock market crashes, it's just like COVID happening all over again. We reset and the Fed's got to start all over trying to reboost the economy and things like that. But because the stock market is here, I would say they would cut if the market wasn't rallying or threatening to sell off. Because the market's up here, it's probably going to be 0. If the market's up here, they're probably going to raise rates again. Again, the Fed does not want to see the stock market crash because what happens is everybody gets laid off. When everybody gets laid off again, it's the same problem as COVID. Everyone got laid off. And people come back in and they start having to get these ridiculously high salaries. And you have inflation and high unemployment, then you get a stagflation thing. And the only cure for that is stimulus, quantitative easing. The Fed doesn't want to do that. They want quantitative tightening. So the Fed does not want the market to crash. So we can tell yourself going into the future that the Fed is going to put like a little iron wall under the stock market. If the stock market is crashing, bad news is good news for the Fed. Because down here, you have unemployment, and they don't want that. Unemployment with inflation. That's a terrible, terrible environment. It turns recessions into Great Depressions. They call it stagflation. Now, as the market goes higher, the Fed's more likely to take a stronger action because the stock market being so healthy can buffer that where a sell-off in the stock market doesn't create layoffs. They're just watching the labor market. If you don't believe me, go back to everything Powell ever said over the last 2 years, and he literally says the word labor market like 40 times every single press conference because that's all they're looking at. And that's why they're looking at that, because all they care about is the unemployment situation. It was the major cause of the inflation to begin with, and it will be the major cause of the inflation if the market crashes. So bad news in the market is good news for the Fed. Good news in the market means that the stock market can handle a lot more bad news, and the Fed goes, aha, now we can start raising rates quickly. So did everybody understand? This is the Matt Cowart bad news is good news theory. And I proposed this a year ago, a couple years ago. If you guys remember, some of my tweets was even predicting when the Fed would stop raising rates. I remember I said a while ago, like 2 years ago, in December, the Fed was going to stop raising rates and things like that and start curbing at the beginning of the year. And people thought we were crazy, and we were right. Once the stock market started looking decent, good news is rate hikes. Bad news is no rate hikes. And that's what happened. So at the end of the day, the Fed still wants high interest rates. It makes sense to at this time. They want to slow down the growth of the economy so it doesn't go out of control. Until everybody gets their jobs back and things reset to pre-COVID levels and employment Yes, they're having rapid inflation because it's starting to take over in a lot of areas. You know, houses rapidly inflated, things like that. And that's my old bad news is good news theory. But anyways, like I said, back in the day, this is years before today, and people I hear like people on CNBC and stuff. I don't know if I could quote myself on that. Bad news is good news. The market's behaving in a way. Any good news to the economy, market boosts up. Well, then that kind of brings the fear back. Oh, well, Fed futures are going to price that in as possible rate hikes. So any higher highs in the market, Fed futures is starting to sometimes, well, at least over the years, predict that the Fed would raise rates. And we were very sensitive to Fed news back in the day, where the difference between a quarter of a point, half a point was a big sell-off day in the market. Right now, the market's not going to care about rate hikes anymore. I'm going to let you guys know that's the future of now. Rate hikes, the stock market will not care at all. You might have a sell-off day or two and the market will continue to rally. We're in that environment where the stock market is not going to care about Fed rate hikes, and that's what they want, so they can raise rates and nobody bats an eye. Economy's healthy enough, people don't care. That's the dip that everybody wants to buy. We're back to that dip. Brian, what are you doing tomorrow? You want to go to Activate and get the boys together? Tomorrow, let's do it. I got nothing to do, man. If tomorrow's Saturday. Foreclosed homes back on the market. I feel like they're holding off with auctions as well. Possibly. All right, guys, I'm going to take it easy here. Kind of just be done with this. I think for good reason. I don't think we're going to sell off today. I think we're going to be nice and strong. But just because anytime you hit those upper DD bands, we always talk about the day being over. There's that upper DD band on NASDAQ. As soon as you get there, it's just the foreseeable movement from here is very rare. Not every time do you bust through this band and keep going, right? It's in a weird stage. I think they were open all day, dude. And I think when I went, I was there till like, I think my time slot was like at 10. So they're open late. And we can go in the daytime. We can go at night. Dude, it's so much fun. See if Reggie and Jad want to go. Get the boys together. It's all the way out in Katy, though. Blech. But it's worth it because it's right next to an Andretti's. So, like, we can do that, and then we can go ride go-karts. Exactly, bro. We'll get drunk before we go ride go-karts. That'd be great. Thanks, Fausto. I love you, bud. Appreciate you so much. So anyways, that was my old theory about bad news is good news. And that, you know, the Fed curbing it, like when you raise interest rates, what actually happens is that participating Federal Reserve banks, right? If a bank deposits their money into the Federal Reserve Bank instead of loaning it to you, then the Federal Reserve pays them a fixed interest rate on it. That's what the rate is. So like if the rate is really high, then banks are more likely to take that fixed rate return from the Fed than lend it to risky borrowers like yourself. You can de-incentivize and incentivize lending by throttling that rate. That's how they could slow down. Like, example is if everybody had a credit card with a $20,000 limit given to them today, you'd go out and start buying all kind of stuff with it and racking up debt. which means prices of things will go up because more spending creates more opportunities for company, more growth, and therefore prices go up because of inflation. So credit can simulate inflation. So the interest rate kind of destimulates credit a little bit, which can slow inflation down and reverse it. So that's kind of what the rate does. And that's how it works its little hands into things. The high interest rate environment, it's harder for you to get a credit card. Things cost more, your dollar stretches less, spending slows down. Companies are more likely to lay people off when spending slows down. People are buying fewer products because the dollar doesn't stretch as far. And therefore, that's fewer people buying stuff, which slows down further. And that's what causes a credit cycle. And that short-term credit cycling, if you study how credit cycles, it's typically how that works. You get those little pullbacks a little bit. But we like talking about fundamentals in a less over your head sort of way and keeping it a little easier logistically in your head to like follow. Put my thing down, flip it in, reverse it. All right. Let's make it a timeline on the old resilience here. I didn't say anything about it. I'm going to come next week and have a hedge pressure resilience, a blue one. Let's see if that's extremely helpful. I'm happy with the trade I made. I'm in no hurry to do anything else. What do I want to do? Should I? I mean, things are looking healthy and solid here. There's that second hedge pressure bounce. We're pushing outside of the box. Just getting that resistance here. So I sold on the pop at the news and called it a day. Let me check something very quick here. Do I think we close long and strong for the week? I don't think that we don't. Things are looking solid across the board, so DD band could be on. I put like a couple micros on it, maybe. What's the worst that can happen? At least 7 points on 4. Positive, positive. Things are looking good. Let's just put a 5 spot. What we'll do is I'll cut on a 477 loss on monthly hedge pressure. This will just be a ride or die trade. 5 micros ain't going to do anything for me. I've probably made $4,000 this week. So if I lose like 10 points on 5, that's $250 loss, right? Ride or die. I'll hang on to it to here. R&R's pretty decent, right? 20 something points. 1,000 if I'm right. So I'll create a 4-to-1 trade. Actually, hold on, mate. It's about 10. Don't let me lie to you. 2-to-1 trade. I forgot it's 5. Not 1,000, sorry, $500. 2-to-1. So I either get it or I don't. Let's call it a ride or die. I'm the same way as Leonidas. Yeah, he's a super smart fella. He knows what he's doing. I'll be in the same boat. Why the hell not, right? Something small, lights are red, or lights are green and yellow. This is really healthy. This is really healthy. We're on the outside of the box supporting here. We have 2 monthly hedge pressure bounces. Resilience is looking great. So why the hell not? If we hit monthly hedge and break, it's a quick and easy stop, and I'll just call it a day. Not really that bad. Yeah, I think you're 100%. 3 cons only. Yeah, like volatility possible. And I'll just hold through any volatility or noise. What the hell? We'll see if we get it. Why not? That'd be nice. All the day. I like it. All right, love you guys so much. Y'all are my favorite. All right. We'll see you guys later. I love y'all. Have a great weekend. Rocket Scooter, hedge pressure, liquidity maps, all the fun stuff we do here. We're glad to see you guys being part of our family. Going bigger every day. Loving it. So I get this tiny little trade. It's an all-dayer. See if it works out. If it does, it does. If it doesn't, it doesn't. But we'll see y'all later.